and above. So the parent has no control, back to the notes. The parent has no control in associate. Instead, exercises significant influence. So what is significant influence? Significant influence is the power to participate in the financial and operating policy decisions of an investee, but without control over such policies. Wewe unaenda tu mkutano, wangapi wako na sisi? Lakini kikuja kwa control of those policies, you cannot. Unaenda tu mkono ionekane you are there. That is called significant influence. Indicators of significant influence, which you can be asked by the examiner anytime. Number one indicator is that there is representation in the board of directors or equivalent governing bodies of the investee. Yeah, so where your company is being represented in the board of directors of that other company, there is likelihood that you have some interest in that entity. Participation in the policy making process, e.g. dividend what? Policy. What work you negotiate mambo ya dividends, your roles are available. Material transactions between the entities and the investee. So if they transact a lot, that one can also be an indicator, but not a sure bet that they have a significant influence. Interchange of managerial personnel between the two entities. Napata MD wa huku ametoka amekuwa CEO huko, CEO ametoka amekuja huku. So when the two entities are exchanging key personnel, then that one can also be a very good indicator. Then provision of essential information between the two entities, where they provide essential information like information technology information between the two entities. Those ones can be good indicators. Accounting for associates. So how do we account for them? Now that we have been told that the parent has no what? Control. You know, like right now, if your company has shares in Safaricom, of course, it's equal shares and a big percentage. So if you want to consolidate during consolidation, you know consolidation, the way we did the other one, you take for parent, you add this. Unaweza pigia Safaricom at I'm preparing books and already I've added my motor vehicle. Tell me how much also I captured my books. Can you? No? Even if you have those shares, that is an associate what? Company. That is an associate company. Eh? At 40, at 50, you don't have control. You don't have control. Even students, another CPA, when you become CPA finalist and you haven't been working, you don't have any work experience, you can become associate member of this bank. I hope you're aware. Whoever has no working experience and has finished CPA, you're allowed to become associate member of this bank for 3 years. During that period, you cannot vote in the chairman, you cannot transact. You are just there to be given time so that once the 3 years elapses, you can be a full member. So associate means hauna control over anything. Lakini mukimaliza, most of you are working. Hiyo tu inakuwa tu story. Si wengine wanakujanga tu hapo unaandikia barua. Has been working here since 2012. To become a full member anyway. So I just want you to understand the meaning of associate. You don't have control. How are you going to consolidate for the books? Associates are accounted for using equity method of consolidation. So what is this equity method? Under equity method, the parent initially recognizes its investment in associate at cost and subsequently adjusts such cost with any post-acquisition profits and what? Reserves. What that means, you invested in Safaricom 1 million. So you just sit, any profit which they will make after that. You know, no matter what percentage I'm controlling, even if I'm having 1% shareholding, and you have declared a profit of 10 billion, that 10 billion, 1% is mine, even if it is small. So what you will do in your books, you just keep quiet. You don't consolidate for the assets and liabilities, but your investment. You check how much did I initially invest? What profit have you made after we got our shareholdings? Then I take my 1%, for example, I multiply with that profit, then I top up. So that is equity method. You don't consolidate for the books, but you check how much did you initially invest, then what profit are you making thereafter, then multiply. This method excludes associates as part of the group, and therefore any intergroup transaction with associates should not be eliminated during consolidation. So when we were doing the workings here, for example, revenue, we're going to check this plus this minus intergroup sales. You remember? But now for associates, we don't eliminate because they are not considered to be part of what? Group. They are outsiders. When it comes to group accounting, they are treated more or less as outsiders. So you don't eliminate any transaction touching associate. However, the parent is entitled to the share of dividends and retained profits. Dividends, lazima wake declare dividends. When it comes to dividends, they are part. Wanasema now you are part of the group. That one we have to come in. So even in the family, nakwanga hivyo. You are only considered as part of family, and you are considered serious as part of family when you are earning. What okay, family gathering. So when you are earning, is when you are deemed to be more serious. When you don't earn, your story. Na unasikia akina nani wenye wanatoka US wamekwama hapa juu. Enda uangalie sisi tukiendelea na mkutano. But now when you are earning, you are considered to be part of the group. So when it comes to dividends, now you are considered. Exemptions to the use of equity method. So where are we not supposed to use equity method? When the parent is a fully owned subsidiary of another entity, when the parent entity instruments are not being traded in the stock market, and that is something you need to know. You cannot consolidate for books if you are not listed in the stock market. And the way I said last time, some of you normally confuse between branch and subsidiary. I'm sorry to say, hakunanga subsidiary hapa River Road. Achimuna spot kuna subsidiary nyingine. Hapa hakuna. For you to have a subsidiary, one, you must be a group of companies, and two, you must be listed in the stock market. Yes. So you cannot so don't confuse between the two. Where the parent fails to file its annual returns with the relevant authorities, if they don't file their returns and they want to consolidate for our books, where any intermediate parent has presented consolidated financial statements of the associate company. Then we have joint arrangements. That is IFRS number 11. Joint arrangements. Joint arrangements. Joint arrangements is an arrangement in which two or more parties have joint control. Okay. Joint control is contractually agreed sharing of control of an arrangement. Types of joint arrangements. So I want you to check for me. There is something I saw about joint arrangements. Check for me. I'm not very sure, but the sittings in 2020 and 2021. Check for me something about joint arrangements between 2020 and 2021. There is something they were saying. I'm not sure of the setting. Just check, then you tell me which setting. I know you are very good in checking that. Ukishika 2020 uangalie vizuri. Hapa ni gawane kazi. 2020 during COVID period, there was only one sitting in November. So what are the gawe kazi? After that, tukaenda April kuangalia. There is something about joint arrangements. I don't know which sitting. I don't know what they were asking. I just remember there was something. Question? November 2020. November 2020, question 4B. 4A. So check for me November 2020. November 2020, question 4A. Question 4A of November 2020. Two types of joint arrangements explained by AFRA. Yes, there are two types of joint arrangements. So put down there when you indicate your notes where you wrote the types of joint arrangements in brackets, November 2020, question 4A. November 2020, question 4A. Question 4A of November 2020. So joint arrangement, we have said, is an arrangement where two or more parties have joint what? Control. That is joint arrangement. So what are the examples of joint arrangements? We have two of them. Joint operations is a joint arrangement where the parties that have joint control of the arrangement have rights to the assets and obligations for the liabilities related to the arrangement. The parties are called joint operators. Then we have joint ventures, is a joint arrangement where the parties that have joint control of the arrangement have rights to the net assets of the arrangement. The parties are called joint ventures. So what makes the two different is the right, what are they entitled to? They have rights to what? So in the joint operations, they have rights to the assets and obligations. Then in joint ventures, they have right to the net assets. Net assets is more or less equity. At one point, some of us, if not all, you have in campus or somewhere, even right now, some people stay bachelors, unapata mna share. Have you been there? You have never stayed as bachelors, sharing. Yes, so during that period, tunakuwa na issue. Unajua ukinunua kitu kwa hiyo nyumba, when you stay as bachelors, when I come with nikikuja na unga, wewe unafaa kuja na nini? Wewe kuja na mboga. But unapata mwingine amekuja na unga, mwingine amefika na sweets. Unashangaa what is the problem? So in that setup, you find that hiyo nyumba iko na TV, kuna viti, among others, na pia kuna rent. So whereby anything you are buying in that house, you contribute equally, 50-50, 50-50 for the asset, even rent, you share 50-50, then that is a joint operation. The parties have rights to the assets and obligation for the liability. Select the liability. So where the parties are sharing, they have equal share to the assets and also equal share for the liabilities, then that is called a joint operation. But a joint venture, they only have right to the net what? Net assets. Net assets mean the capital. So because unaweza pata wewe ukinunua kiti, wewe ulinunua peke yako. Hivyo. So we just assess the total equity, that is what we share. Because wewe ulinunua kiti kivyako na mimi nikanunua TV. So what we check, how much have we invested? We subtract all the liabilities. What remains is what we do, what? We share. So we don't consider that way we do hapana. Just add everything, subtract liabilities. So what makes joint operation and joint venture different is the right they have. So in a joint operation, they have rights to their assets and obligation for their liabilities. But in a joint venture, they only have right to the net assets. Don't confuse. There is no distinction between two forms of joint arrangements for consolidation purposes. Joint arrangements are consolidated for using the equity method, the same way as associates. You know, when you have 50%, equal share, you cannot claim control. Ama? Yes, you can't claim control if you have 50% sharp. Let's say, you know, we are Africans and Africa is our business. You know? Yes, where men tends to be polygamous in nature. So the man has 2 wives, wife 1 and wife 2, and the man has seriously disclosed without hiding anything that his income he normally share equally. His salary is 200,000, and out of 200, he normally gives 100 to wife 1 and 100 to wife 2. So mwenye ameona atakuwa namsaidianga na fares, ndio? Yes, so in that case, the wife 1 cannot claim control of that husband, neither can wife 2 claim control. No one has what? Control. So that standard came juicy. It's very new. AFRA 11 came in 2013. There before, we were not using equity method. You know, equity method now will disregard that nobody has control. You just wait for dividends and profit. Any other thing you are not allowed to consolidate because you don't have control. But there before, we were using what is called proportionate consolidation method, which was not making sense. In proportionate consolidation method, everything of that joint venture, you take 50%, even assets. So the argument was, you find that these assets, your motor vehicle, you want to take 50%. You can buy motor vehicle, then mimi ninunue nini? Okay, we can be in business. Wewe uko na lori, na mimi niko na mchanga. Sindio? So wewe leta lori, na mimi nilete mchanga tubebe. So we are in joint, so that is a joint arrangement. So ISB, ISB are the people who normally come up with these standards, the International Accounting Standards Board. They argued that, apana, this thing is not making sense. You cannot, because during consolidation, we were taking 50% of all the items of the joint venture. So there is no way you can claim all the assets at 50-50. Sometimes you buy this, and me, I'll take the in charge of another one. So during consolidation, both associate and the joint ventures are to be excluded. And any transaction between parent and joint arrangement should not be eliminated. You don't subtract. Elimination is only between parent and subsidiary, and by extension, subsidiary. That is the farthest it can go. But parent, associate, joint venture, you don't eliminate during consolidation, including any transaction between associate and subsidiary. You know, group comprises of parent and subsidiary. And the way I've said, subsidiary. But any transaction between associate, joint venture and any of those members should not be eliminated, because with them, they are deemed to be third parties. They are outsiders. We don't have control. Are we good? Yes. Then now, let's go to a question. Let's check illustration. Right. That your second name is, is that name Kenya? Nama is US. Right. Is that a Kenya name? Where are you studying from? US. Ama, is that name? I've not asked someone like Brenda. Brenda. Huh? So our normal handout, and I'm suspicious, I'm not sure. Maybe someone came after I posted. So can someone repost in the group that handout? We did June 2011, question 1. Now we want to go to question 2 of that handout. So someone can repost for online purposes, just in case someone came late. Then we proceed. The following people are not muted. Bright, Joyce, yes, those two. Joyce and Bright, kindly mute yourselves. So I hope someone bright is from the Western countries. So I hope someone has reposted our things. I can see it has been reposted. So can you go through question 2, kidogo? Question 2 of that handout. So allow me to start that question. It says, and I read, the following financial statements relates to H Limited and its investment companies, S Limited, A Limited, and J Limited for the year ended 30th April 2012. Good. So income statement, as you guys can see, we go to the statement of financial position, also as you can see. Let's go to the additional information one. H acquired its investment in other companies as follows. So the company being acquired, company SAJ. Dates of acquisition, S was acquired on 1st May 2008. A, there was a typing error, whoever typed for me the question messed. A was acquired on 1st May 2009. So you can change if you have. So 1st May 2009. J was acquired on 1st May 2010. There was a small mistake there. Shareholdings. Yes, okay. Yeah. Yeah, S is okay. 28, 2009, 2010. Shareholdings S. S, they acquired what percentage? 80%. So we did zote. S, we acquired 80%. So the group S is? S is a subsidiary. A, we acquired 40 associates, 50% J. Yes, so we'll just be using the word joint venture. So I'm happy to mention you. Cost of purchase is the purchase consideration, the amount you pay to acquire the company, mostly relevant when calculating goodwill. So when you are calculating goodwill, that is what you will concentrate at. Then revaluation reserve on the date of acquisition, we can see them there. Retained profits on the dates of acquisition, also you can see them. H also invested in a half of the 10% loan stock in S. No problem. The fair value of the non-controlling interest in S was 75 million. Meaning, when calculating goodwill, we will use what is called full method. You remember full method? Full method means you also bring NCI when you are calculating goodwill. During the year ended 20th April 2012, H sold goods to S Limited and A Limited as follows. Also, there was a mistake there, which I need to rectify. Not rectify, there's something which is not being reflected there. Where? So they sold to S and A. So you are seeing the 100 and the 50. That is it was the selling price. So up there was supposed to be indicated selling price. That was selling price. Then 30 and 20, profit margin. 30 and 20 is the profit margin. Then 50 and not what? Not applicable. Those are the percentage in stock. Percentage in stock. Correct. So 150 selling price. 30, 20 profit margin. 50. Yes. 30th April. 50 not applicable, that is the percentage in stock. So that is for purposes of calculating unrealized profit, not for. On 1st May 2010, H sold S an item of land for 200 million, reporting 25% profit on the initial cost of the plant. The group charges depreciation at 20% per annum on cost of the plant. You know where UPFA? Sure. Yes, that is UPFA issue. All the goodwill of the three companies in which H Limited has invested are estimated to be impaired by what percentage? 25%. In the year ended 30th April 2012. No impairment loss have been reported in the past, meaning there is no accumulated impairment loss. Included in the trade and other receivables and trade and other payables are the following outstanding balances. So due from S to H, due from A to H, due from H to J, as you have seen. In the books of S Limited, the amount due to H was shown as 40 million because S Limited had sent a check for 10 million, but H Limited had not recorded the check. All the other balances were in agreement. What is that? That 10 represents what? Cash in transit. People are very serious here. Next, number 7, the group uses the full goodwill method. Andika hapo, no need of telling us. We know, provided the fair value was given for NCI, you will use what? You will use full method. So there's no need of telling us full. And the proportionate consolidation as per S31, we no longer use proportionate, we will apply equity. This question was 2012 before the standard changed in 2013. All dividends and interest have been paid by the end of the year. Required consolidated income statement and consolidated statement of financial position. So allow me, najua zile vitatushika hapo mbele. 1, so kuna impairment. Kwa hiyo swali, where there is impairment, it will affect the administrative. So let's work out impairment, let's work UPI, let's work UPFA. When we work those ones, once we kick off, we will not have a lot of issues. So fine, I'm one person, I don't advocate for so many workings, but now after Songa, working. So those ones we can always work them so that when you start, you are good. So for me to get impairment, I must first of all get what? Goodwill. Yes, so let's have goodwill computation. So right there, goodwill. What we do, let's calculate goodwill for all of them at once. Instead of one by one, it will waste our time. Let's calculate all of them. We compress them in one working. So compressing them in one working means you bring here S. Of that. So how do we calculate goodwill? You start with the purchase what? Consideration. So right there, purchase consideration. Purchase consideration. S, we invested how much? Cost of purchase, additional information number 1. 300, 200, 250. Then in S, there was fair value of noisemakers. Fair value of noisemakers, NCI, this is 75. You know, number 2. Therefore, this is 375. This is 200. This is 250. Bring the net assets. net assets. Remember, net assets we take on the date of acquisition, but ordinary and share premium they change. So ordinary and share premium, just pick the ones in the equity, but retained earnings and revaluation, you take on the date of what? Acquisition. Those ones keeps on changing. So under equity, are you seeing ordinary share capital? So ordinary share capital 200 across. Share premium is 50, 50, 100. Revaluation, check note 1. The date of acquisition, 2015-20. Retained earnings, 85, 150, 120. Then there is nothing. So can you add? Can you add for me this very fast? Those are the net assets. Kidogo tu tutapata goodwill side. Someone is having figures, prudence, 355, 415. But this one, I know you are lying. This is for 40. So they are 40. Prudence check, you are working, it is not 390 for 40. Then you take the percentages. Okay. For S, parent was controlling what percentage in S? 80. But whenever you are using full method, you don't apportion this. You remember? Because parent 80 plus 20 is 100%. So you don't apportion. When you apportion, it means you are only calculating goodwill for the parent. We only apportion if it is partial. So I'll take the entire of this, but this one I'll take 40. The other one I'll take 50% of the net assets. We never acquired everything. This one I'm taking 100% because it is full method. When it is full, you have taken both parent and NCI into consideration. So this is 355. 40% of this, 166. 50% of 40 is 220. So call this one here A. The ones you are subtracting, call them B. Therefore, goodwill will be A minus B. So can you take all your A's minus the B's? Then you give me the value of goodwill. Once you get goodwill, give me impairment. They said all the goodwills are impaired by what percentage? Okay. 25, right? Impairment loss 25%. So the goodwills you get, multiply by 25 and give me the impairments down there. The first goodwill you got how much? Goodwill. 34. 5. 21. If you add all the impairments. Goodwill, prudence 20, 34, 30. 5, 8.5, 7.5. Yes. Total 21. Hiyo itatusaidia huko mbele. Impairment will catch up with us ahead. Let's calculate UPI, unrealized profit on inventory. Those are the things which will catch up with us. So UPI, using that note, the one which we said is not note number 3. So using note 3, during the head sold goods to S and A as follows. So this is, you take the profit margin. So direct 30%. You only do with parent and subsidiary because you are not applicable. One goods which you made. So 30% times the goods which were not sold. So the percentage of stocks, they'll say 50%. So 50% of the amount. The amount was 100. The amount was 100. Additional information number 3. All right, so how much do you get? 15. So UPI 15. So wherever you need UPI 15. Then also note 4, UPFA. Check note 4. there is unrealized profit on fixed assets. Unrealized profit on fixed assets in note 4. Hedge sold as an item of plan for 200 million, reporting a 25% profit on the initial cost of the plan. The group charges, fine. So UPFA, you take the profit margin. This is 25% profit on the initial cost. That is markup. So margin will be 25 over times the sale value, which is 200. So the unrealized profit on the sale of that fixed asset will be how much? 40. Then these people were charging depreciation. So you know when they were charging depreciation on that asset, it means they are charging profit inclusive. So you check excess, it means they are charging excess. So excess depreciation will be 40 times 20%. That is how much? 8. So from there you can always start, but kuna kitu naona pia tutashika tu tukiendelea tukaenda mbali. Check note, the small note before note 2. The small note before note 2. Joyce, UPI need venye tu note 3, you see note 3 kuna hiyo omissions which I explained. The 100 and the 50 note 3, Joyce, those are the selling price. 30 and 20 is the profit margin. 50 not applicable is percentage in stock. So how do we calculate unrealized profit? Unrealized profit is profit margin. So here the 30 was direct. You don't convert. Yes, so inakuanga profit margin times the goods which were not sold. So the goods which were not sold is 50% of the 100. Then profit margin direct is 30%. Joyce, I hope you have understood. Yes, yes. Joyce, are we in order? I want to check the small note before note 2. Good. Let's check the note. That note before note 2. They say Hedge also invested in a half of the 10% loan stock. They invested in a half of the loan stock. When you invest in loan stock, what are you expecting in return? Interest. So, yes, when you invest in loan stock, you expect interest in return. Read note number 8. Read note number 8. All dividends and interest had been paid by the end of the year. Dividends and interest had been paid. So it means when these people invested in that loan stock, they will receive what? Interest. And that interest should be eliminated, because when you go to P&L, check their P&L, their profit account. When you check P&L from top, are you seeing the investment income? Are you seeing investment income? There's 85, the 2111. So, Kwani, what is investment income? Especially even in tax perspective, investment income is mostly dividends and interest. So those are the investment, what you get from your investment. Mostly what you get from your investment is interest or what? Dividends. So what happens in this 85, especially this one for parent, inside that 85, you find that parent kuna internally. There is interest, they invested in the half of the loan stock of one of their own. So there is interest which came internally. Now the parent took that interest, akaweka kwa investment income. If you go down the P&L, just go down kidogo, you'll realize that these people paid dividends. Are you seeing dividends paid in the P&L? The dividends which were paid by SAJ, parent will say I'm entitled to receive the dividends. So parent took their percentage of those dividends, then they included in the investment what? Income. So our concern should be, should we include intergroup receipts, what they received internally? The answer is no. So our task is to calculate how much interest they got internally, you subtract from investment income. How many dividends, how much of dividends did they receive internally? You subtract from investment what? Income. So allow me to work that as the last. You call it intergroup investment income. Intergroup investment income. So in any group question, once you see investment income in the P&L, don't rush to put it there very fast. Check whether these people pay dividends and whether they pay interest. Then you say the interest they received internally, we have to subtract. So one, intergroup interest. Intergroup interest from S. They invested in S. They say they invested in a half of the loan stock in S. So go to the balance sheet, check how much was the loan stock in S. Parent invested in a half, and those people are paying them interest at what rate? 10%. So in the non-current liabilities in the balance sheet, are you seeing the loan stock of S? How much is that? It is 200. And they are saying parent invested in what fraction? Half. Half of that 200. Can these people pay interest at what rate? 10%. So hiyo silent wamechukua na wakaweka huko juu kwenye watuambi. So how much is this? 10. Haya. 2, intergroup what? Dividends. Intergroup dividends. Intergroup div from S. S, any dividends being paid by S parent will get 80%. So S paid dividends, what, how much? Go to P&L, the dividends paid by S. They paid 50. So of that 50, parent must have taken 80, that is 40. 40. Wamechukua na wamekaa nayo. From A paid dividends, what, how much? 30. Parent must have taken 40%. 40% of 30, 12. From J, when it comes to dividends, it's allowed in part of group. 50%. They paid 40. 50% of 40, 20. So internally, for investment income, these people received that total. Can you add all of them? Yes? 82. So 82 out of 85. So you go 85 here out. Out of 85, 82 were just collected internally. You unatoa kwa consolidation. With those ones, we are ready. We are very much ready to kick off. So let's prepare the first required P&L. Joyce is saying when you add all those things, it's 72. So mimi hapo addition siko. Amewacha wewe Joyce, wewe umeacha intergroup interest. Unaongeza ile 10 to get the total intergroup. So Joyce, 72 plus 10 siku hizi ni ngapi? 82. Let's proceed. Hata Prudence amekwambia hapo. So right there, the name of the parent, H group. H group. Consolidated statement of profits or loss for the year ended shillings are in. Plus, we are ready to kick off. Before you prepare any P&L consolidated, I don't know if I told you last time, check when the subsidiary, when was it acquired? If it was acquired within your portion, so within the year, your portion. But here subsidiary was acquired in 2008, and we are in 20 which one? I don't remember 2021. Is it 2012? 2012. So by the time we were starting 2012, whatever they had been acquired a long time ago. So there's no apportionment. So let's kick off. Now una copy yao can adjust. So give us revenue. Revenue is a matter of addition. 12 plus 6 minus intergroup sales. Minus intergroup sales. Yote mpaka hiyo profit kiwa ndani. Intergroup sales was 100. You remember? The intergroup sale of goods was 100. In the other question, tulitoa mpaka intergroup sale of PPE. So kama mnakumbuka? In the other question, I said whether it is sale of, you know, they recognized as a sale. So whether it is intergroup sale of inventory or PPE, you have to subtract. And that's what we did in the other question. But in this question, I'm not going to subtract the intergroup sale for PPE. The reason being, we are in 2012. If you read note 4, that PPE was sold in which year? So 2010. So the sale must be within the current financial what? year. Otherwise, they get off. But now the sale was not within this year. P&L is always based on annual basis. So you only subtract that. This is 18. That is how much? 17. Give us cost of sales. Cost of sales 18,050 plus 53,60. 54. 63 minus, you subtract again the intergroup what? Am I giving the correct figures? Ama nimerudi huko kwa 1, hata nikuje hivi. Yaona mpaka wengine wanafunga macho. 650 plus 250 minus, again you subtract the intergroup what? Sales. You subtract intergroup sales But now sales is profit inclusive. To get the cost in this 100, you add the UPI to reduce it to cost of sales. UPI we got how much? 15. So when you add UPI to this, you are reducing this one to minus 85. Then I told you, once you are done with UPI, please always remember depreciation. So, yes, I acknowledge that the asset was sold some 2 years ago, a year ago actually. But we know depreciation is normally on annual basis. So every year, these people are charging excess depreciation by how much? 8. So we call excess depreciation. And depreciation is a cost of sale component. So they normally charge excess by 8, and that excess is included as part of cost of what? Sales. So once you're done with UPI, always think of depreciation very fast, because in most questions it is there. So you subtract the 8. How much? 807. Good. Subtract. Now subtract it. You get gross what? Gross profit. Gross profit will be 893. Bring. Just proceed. Hiyo yao hakuna kutoka nje. Investment income. Investment income. This is 85 plus 2 minus Joyce 82. The total intergroup investment income. So tulipata pale interest and dividends. Not 82. 85 minus 82 is 3. 3 plus 2 is what? 5. Then we have not been consolidating for associates. So and joint ventures. So joint venture and associate, well, you keep quiet. Ukisikia kuna profit, bring my percentage. So you come here and say share of associates, share of PAT in full column associates na sister yake joint venture. So check PAT, profit after tax, in that. You know what free tick for every person who is attending that exam. So profit after tax in A, you are seeing how much? 71, eh? No? Profit after tax, immediately after tax. 71. 71, eh? Immediately after tax. Check well. You will take 40% of that 71. Then in joint venture is 111. You'll take 50% of that 111. So do this. Hey, we'll bring it somewhere here. Then we give it as one figure. The share of profit after tax there. So can you do for me that chap?
Class in 6 start. But Saturday kwanza tulianza saa kwanza ile tulianza class. after that, still small position, 3 was 13. That's in stuff, then it was 0 for 10. How can you see? Kasami. But when you're not education, so it's a you. Because it's a
Sorry for that. So what did you get? This one is 20. And this one? Total? We proceed. We just proceed. Just proceed. So proceeding where we left, there is distribution. So distribution in other working. So you just add what plus what? 100 plus 140. Giving you one. Administrative 120 plus impairment. Impairment is classified here. I remember impairment was 21. 21 total. So add and cross. How much? That one. Finance cost 40 plus minus 10. So kuna 10 ilikuwa inalipwa internally. Ile ilikuwa inaenda kwa parents, ndio? Yes, so you get 10% of 200 give us 20. Then of this 20, half was going to the parent. So you're not talking. That. Okay. 50. Which give me profit before tax. So profit before tax start from 893. Chop chop. You are saying you are getting, I can see people 560.9. So this is 560.9. Let's say you figure in the morning, 560.9. Then from there, you bring income tax. Income tax 60 plus 50. How much? 110. So PAT, profit after tax, for 50.9. Then you just share that profit and you're done. So you say profit attributable to noisemakers, then holding company. So you share that profit, then we are done with here and there, 450.9. So NCI, I'm not even going to do that working outside there because it is easy. NCI, I told you even in the other question, they don't take the percentage of consolidated profit. They take the profit after tax in the subsidiary. So that is where NCI is found. So you don't give them profit of consolidated, let them share. We share with them the profit in the subsidiary after tax. But we always adjust 3 items. 1, depreciation. 2, impairment. 3, unrealized profit. So you can do something which is you can even do here. So it will be 20%. Parent was controlling 80. So minority will control 20. 20%, what was the PAT in the subsidiary? Can you check the profit after tax in the books of the subsidiary? Hmm? 152, correct? 152. How much was the impairment in the books of S after we calculated goodwill? And we only subtract on one condition, that it was full method. Full method means NCI was part of goodwill computation, which they were 5. So impairment, so you just indicate in your books impairment, and impairment for your. Then UPI also on one condition, that the sale came from the subsidiary, eliminator upstream. The sale came from subsidiary to parent. In this case, the sale was from parent to subsidiary. It means the profit of 152 of subsidiary is not affected. And realized profit affects the profit of the seller. So no, this one was the purchaser, so it does not affect their books. Then depreciation. Nani aliuziwa hiyo asset? Mwenye aliuziwa ndiye alikuwa na charge excess every year by 8. The asset was sold to who? H sold to S. So S was charging excess depreciation by how much? 8. You charge excess depreciation, you understate your profit. So you add it back. So add back 8. Just simple as that. So just indicate those figures. This is PAT of S. This is impairment. That one is depreciation. Instead of going to do workings there, which will not add you anything. You take 20%, what do you get? 31. So how much goes to holding? For 50.9 minus 31 will go to the parent company. $419.9, and you get your 10 marks. Any 5 ticks there will give you 10. Thank you. So let's meet in the evening. We do the balance sheet part. Then, if possible, we check what's next. But Simbaya, so Simbaya sana. Na inakuja group is coming. So, yeah. Or tomorrow. Hata tomorrow itabidi tupatane mapema kidogo. Hiyo iko kati. 11. Sanga. Au wengine wote tulishawaambia 8:30. Early morning na evening. Yes, we will just change because our wengine wote tulishawaambia 8:30. Haya, sawa.
At the end of the day, hata yeye mwenyewe anakupenda na anakuambia asitakuta. Hakuta unaenda unaona sisi unaona sisi unaona audit utaambiwa defines lazima unaona sasa ninakwambia ujisikia kwambia hizi vitu zitakuja. Sina na nasema una state kama anafundisha mbona kama anapenda anasema kuja mwenye tu kufanya na wewe shesike hata kwa alikuwa kuizwa sema fanya lakini kuna demo ikiwa naye alipikanga 5 na 6 akashikwa na stake yake na jibu model confuse. Unajua kwa hiyo time ile ndio ilibadilishana kusema ndio timu ya kichofu somewhere sema ukienda kwa exam mtumie foto, lakini question inasema tutumie system model alikuwa mpigi 5 na 6 bora kwa siku tano alikuwa hiyo ndani alikuwa anatatua single bora, lakini alichukua ndani juu alichukua ni akaidia
kana fanya futa sawa kana fanya futa
usema kama tuachocha sana hapo sasa serious serious
Pasa hadi zinanipa stress.
Ili kinaweza kuanza classes lakini ndio historia mbele kwa shule ndio ndio sio kwa nyuma yetu singi ndio mbali sana lakini kwa baita ndio na kama ni kama lesson start but asili ndio lesson moja kwa maana lesson moja sio
Umekuja groups ndio
ile unafanya ile question ya this is the second question ya
from where you start. When you open up it's not so we are confused. We are confused.
Hata mimi shida sio kwa nini kwa sababu funga pata niko na nafsi hata mimi
it's 3 months.
no,
Kama ueleke sasa. Lakini hata mimi sasa na hakika at least this kiona swali. Lakini kusoma hapo.
Zingine ndio wanakucha
Unaona hapo kwenye huko hakuna price kwake.
just jua, yani jua hiyo
Unaona swali ikizua na hapo ina test
no, unaweza jua if you read hiyo sasa kama utafurahi watoto wanafunzwa kama kwanza
because here they are sections simple practical units. So therefore,
so okay, therefore me is because okay, it was my first time wanapeana opportunity ya kama internship walikuwa na haya lakini kuna bracket bora upate
so juu maisha ya akipea kitu na hiyo kwa basi kwa tumina sasa mabeni hapo tutatoka au kana
unajua anaweza kuwa yeye na klasi
tukio majira tunaanza
walikuwa na unatoa
najua alikuwa anapenda chanzo sawa je, mimi sikuwa na interact nao kabisa ile, kwa sababu mimi I was more of a food person, so mimi sawa kama mnaweza ninaweza application apply taxation.
Lakini tax pay kuna mingine inaelekea sana kwa wazalendo sasa tunachukua tax sana.
Hata kwangu watu hata mimi sina.
But me, okay, only from yeah, so
Huko kuna kwamba na faculty tunapewa west specialist.
kama mali ya play.
Because in your you are the one was able to. So
No,
kita kupata kama akan kita facilitation peke yake because I don't need.
Yes, kuna haya kwa center. Kwa center ya research.
Na unajua nina finance I hand over to
I already know who wants to be.
Mbona pale Samia sio
na tusu.
mbona pale Samia
Kianza jioni. Ili karibu na klasi. Natoka kwa sabini msingeja. Natoka kwa sabini siku leo.
Okay.
Basi siku inakuwa weekend.
Weekend na kwa klasi asubuhi. Alimwambia nje.
Basi
Hapana, sisi tunamaliza video.
Ndio ya akili sisi. Wote kwa
kuna
elimu ya kuleso mfuata after. Sasa kila siku kuangalia na hiyo sala asubuhi hadi jioni.
Wewe uko na alimoni na sio?
Si ifanye alimoni. Tunasoma Saturday asubuhi tu.
Alimoni kitake.
Kwani hamko hii group yetu ya asili?
Sasa si ndio
but sasa unajiuliza kwa sababu
Tunakuta sasa
no, our
kwa hiyo mimi ndio kuna stress kuna wana so that's why kuna make up this with you
and then this and it's also whatever during the week. But now on Sunday,
Kitu kufanya mwana ya mzee. Siku yetu kufanya mwana.
so as a theory to hot shot
Sunday sasa ile ya
yes it is as a theory to hot shot free
Kitu kufanya mwana.
sasa hii si nimesema tuache kwa kwanza sasa Tuesday ile lakini kwa shot
naumia sana kwa nani na haya. Alimwani sasa unakuja hapa sana. Alimwani always answer faith. Kwanza kama kuna stress ni Tuesday na Friday.
mimi kila siku Monday
Sasa nakwenda hivi.
Sasa
yetu ifado washauri kwa shida yako
asubuhi
kuingia watatu hiyo watu wanne na kwa 15
na hata sisi jamaa na inahitaji network ile kwa step ya kwanza. Hiyo ndio mwanzo.
Ile district.
kama tuna safari wewe ndio uko sawa hata yeye sio umejaribu pia ya organization
When you buy the machine, and the positions are. Or Satan. Mimi nakuambia upate ununue sinaona sasa we need to develop it this one to be following my foot. So hata ukienda kwa kishia hakuna ndio uniform zitangani kuna chaja mwananchi wa kawaida ndio pamoja yeah, you can say oh, we were winning, but it was so other people try. That's right. Yeah, I know. Then I did something. Amefika. Filemon, sorry. Bana. Unajua nifanye nini?
Somebody against you.
Huyo anataka anataka huko kwani hujui kuona mtu wale. Huyu ni wale. Nataka see what was the same part. So the other was
Very simple. That's your difficult. Those people from Oman.
You're from? Yeah. Oh, I think I saw you there.
Because I come from
Jesus!
Satan!
Oh, they are using that.
Satan! I think I have a case. Okay. Kidogo sana. Angalia msioka.
Wana pesa kwa wanasiasa kula kidogo tumia. Sio pesa yako. Na ujamaa
Dan mwanzo. Angalia kawaya. Sikia sauti ya kawaya. Lakini msijali.
I think there's maybe a source of this, and then it's your.
Can get me with that? Just
I thought.
Tunafanya mambo kweli, yani ni kama sijaisikia huko. Nilikaa karibu 4 years sasa ya Nyanza.
just get
Lezi tukanyanga tu kwa Nyanza. Yeah.
yeah. Of course, that is a city of so much.
Hata wenzako hizo places zingine nilikuwa najua hayo.
Ukimaliza kwa kamba darasa.
Tumemaliza kwamba hata kama ni kumaliza
Okay, sawa. Nitasema hivi basi nikataka.
no
Kwa hapa. So, I saw a name like, sijui kama kuna chance.
I can register in the
I thought ni kama niliona jina lako ulikuwa na jina yako kabisa. So, nikafikiria ni kama but now I saw you very really nice suits.
Sport shoes na suit.
The brown jacket.
Lakini wawilizi wanadanda na wanafanya viatu za
Provision.
mkadai apenda viatu za black.
Na pro viatu na maji na yes.
Hata we have ladies na trench coat on the color. And then they are very proud.
Lakini mbele atafaa nzuri kama ni fundisha kwa hiyo ofisi. Kwanza na kai kwanza. Kai anafaa kai. Alio kwa ofisi. Akitoka kwa mlango hivi akachapa.
Shida yetu
Kwa wajui kuvaa hicho.
kwa the next government. So
Hakuna mahali mtakupeleka.
Mimi wa hiyo sike.
Hakuna mahali mtakupeleka.
Hakuna mahali mtakupeleka.
Hakuna mahali mtakupeleka.
okay. Kesho kura. Sio na kwa hiyo
Ndio maana kama nimekuambia
the remotest part of the remotest part of
kila siku jazz. So haya maneno fake hizo. Hatutaki tukichukua waanze kushika.
which class?
Kwa hiyo jamaa anapata tofauti na
Audit na
FM
na hiyo ni class.
jazz. Umesikia hii tutachukua asubuhi.
Si kitu tunachukua na 7.
Tengeneza tafuta mawe iwe mingi. Umesikia?
We'll talk.
Hata ukitumia huyu mada na kama ameamua hii
Let me tell you something.
haiwezi badilika.
The thing
Yes,
is,
unajua saa hii jazz. Mimi naona naona unajua mtu mwenye amedesign kwa mazingira hiyo. Kama anaamua hakuna saa hii design. Acha jaji hizi mwaka utakuwa unachunga sawa. Bora unapenda hapo mtumewa. Okay, sina ubaya. Sasa bidii kazo tu. Mbona leo mnalala hivi? Wewe sasa. Sivyo ndio inafaa kuwa. Nilikula wakati
Nasikia vizuri.
Yes.
Alright, so from where we stopped in our last class, that's my passport. What were we doing last actually? Bunia. Oh, ile ya 2021. Okay. One. Was question one, right? So let me get my paper, check that question.
And I think that means picture. That's all because
Hakuna online mtu wako. Just the normal cards.
So I can acquire. If public acquire 90% of shares.
Alright, so we can kick off. Unajua kitu ndio working smart. Nasikianga watu wakisema work smart. Hiyo inamaanisha nini? Don't work hard. Work smart.
Work smart. Bora matokeo. Sijitoshe sana.
Bora matokeo, si ndio? So unaona kama unajua hii class mostly unapata 90%. Hata 90, unapata 99%. When you are evening, either they are engaged in some other activities or they are working, si ndio? So unapata watu wamechoka, kitambo mtu ajikuta kuje huku. Unajua lazima uelewe, unapanga. So mwalimu lazima work smart. Si ati ikifika 8:30 sharp ushafika hapa. Unajua kuna mtu nimeona alikuwa anamesengenya na mwingine akasahau purity, instead ya kutext huyo mwingine inbox ameandika hapa tu mwalimu anachelewanga tu. Purity hakusini. So na wachanga klasi tulie, kisha tulia. Yes. Itulie, klasi tulie kwanza. That's called working smart. Bora matokeo. Juu sasa ukikimbia alafu hao wengine mwacha. Like I remember there was a lecturer alikuwa anatufunza. Day 1 alianza topic 1, alianza na group accounts. Yes. And we were only 4. And finally when we were finishing class we were now over 50. Na alianza na group day 1. So where are you taking those people? And we are serious. Have you done consolidation? Yes, I'm done with that unit. Lakini watu wanaenda wapi? So inaitwa working smart. So purity nimeona ulikuwa unasengenya kuingine lakini ukasahau kaandika huku but amesema sorry sawa. But it's not a big issue. So let's go to this question. September 2021. Purity, si kwanza nimechelewa na kwanza hapa by 5:30 every day. Ile tu na pair time mtutulie. Wenye wananyonyesha watoto wamalize. Which is possible. Si ni ukweli? Watoto watulie. Yes, wenye wanapika chai wapike. Sisi tukishapita hiyo story ndio concern. Haya, iko wapi hiyo swali? Page 12. Haya. So tulifanya which workings? Hebu go to your books and tell me the workings which we did.
Yes.
Jina hizi tunadanganya unaona sasa.
So it will be tell you because I'll forget. Huh? Yes, please let's just do that because I can't even recall. Juliet amesema, thank you. I had to drop my daughters, you see. Alice. So please let me just refresh the question so that I can understand. But actually, I wanted to sum it because we will finish. Time is enough. That's sufficient time to finalize it. And my target is to finish this so that Monday we start on foreign subsidiaries. So on 1st of October 2019, H Limited acquired 80% of the ordinary shares in S Limited when the retained earnings of S Limited were shillings 53.35 million. On the same date, H Limited acquired 40% of the ordinary shares in A Limited, paying shilling 16 per share. So the acquisition of the ordinary shares in S Limited was through a share exchange of 1 ordinary share in H Limited for every 2 shares in S Limited. The market price
I was requesting.
Kidogo to online. I'm going to interrupt you. I want to end the class, then you log back again. The reason I want to record, it is recording, yes, but this is the same I was using in early morning. So I was recording that class, it has just continued, the same link I used in early morning. So you see when I share, it's just a continuation from 6:15. Yeah. So let me just end, then I make a good recording for this class. So log back immediately.